Everybody, this is Joe Cusick with Cusick Group Securities offered by MoneyBlock, and you're watching MarketStream.live and our segment that we call Strategy Now. Now, it is July 13th, and we are getting into the tail end of the week. It is Thursday, and what I really wanted to do is give some context about a concept of implied volatility. And this is just going to be a real quick overview of something that I think all of you could take away from this discussion, the ability to look at markets, especially markets as we see them now at all-time highs, and have some context on the expectation of big potential violent moves. This allows you to sleep at night because I'll tell you right now, being able to control your emotions in situations like whether it's in the markets or in life in general, where you just feel so much anxiety, even though things are going great, that you just can't control it. Well, having perspective and being able to balance those expectations, that uncertainty, well, that goes a long way and leads to much more fruitful, non-sleepless nights. So let's jump in. And where I want to start is taking a look at the CBOE website. If you go to CBOE.com, they actually have some great volatility indices that not only take a look at the overall volatility index, the VIX, which is the overall market index that tracks fear in the S&P 500, but they also track the other indices like the Nasdaq, the Russell 2000, and they have ones on individual stocks. This is important, and today what I want to do is take a look at specifically the volatility index for the Nasdaq, and you'll see them listed here. As a matter of fact, you can see that the CBOE has options on the volatility and so forth, but if you go to the volatility index for the Nasdaq, it's actually down here. It's called VXN. You can see it here on the screen. VXN is the symbol. And really what that allows you to do is, let's take, for example, I look at the Nasdaq. I'm looking at the Nasdaq on the chart, and the Nasdaq came down and challenged its 50-day moving average late 2 weeks ago and into early last week, but then has just retaken the upside. Now, most of us during this period of time, as we were talking about it, we knew the weakness in the tech sector. We saw the FANGs under pressure. We saw Apple lagging. We even saw Apple lagging yesterday, its large cap peers. But we had this anxiety built up, and that anxiety is represented by the blue line. This is the VXN as it's charted against the Nasdaq 100. And you see, when the market pulls back, volatility really pops. That means that we have a heightened expectation of continued or spiky moves. Now, with the VXN getting up into that 18, 19 level, as you will see, and it just really skyrocketing, that means that you have a heightened sense of potential violent moves. We've seen this pull back considerably over the last 3 or 4 sessions with the market going to the upside. So this is what I want you to take away from today's discussion. When you see volatility spike, that's just telling you that, guess what? An event is occurring, and if it spikes before the event, in other words, you start to see volatility rise when you're here or here in the market. And then all of a sudden when the event happens, you'll see that there's a spike, and then it reverts back to its mean. Because the mean for VXN is right around that 14, 15 level. And so when it jumps to 18, you're seeing almost a 50% spike in its average. And when you see that type of spike, you'll see that, first of all, it doesn't maintain the implied volatility rank, the high one, for very long. It will revert back to its mean, which means that whatever the current trend is, if it's still intact, or if the new trend starts to gain some traction, volatility will come off. But it does not mean that you should be complacent, okay? It means that now you understand that when you see volatility on the move to the upside, that means that either a trend shift is occurring or that the current climate, in this case for the Nasdaq, the bulls, they need to really catalyze, which they did late last week and early all of this week, to retake back that trend that they had established over the last 6 months to a year. And currently, right now, over the last 2 sessions, they have. But now we're coming into an event called earnings, where all of a sudden you're going to start to see that entities are going to be reporting. As a matter of fact, we had a couple report today, one specifically Delta Airlines. Now, I do have some airline positions, but Delta came out and disappointed. The stock actually was up, but if you actually take a look at the stock, DAL, the stock is now pulling back $1.22, down 2%. Now, the options we're pricing in the stock, which uses the core component volatility as the forward-looking component, that's how we come up with the estimated moving average. There was about a almost a $2 move being priced in going into this event, and it's moved about half as much, or roughly around a 3.5% move being priced in, and it's moved 2%. That's what the options were pricing in going into this event. And so with that being said, knowing that kind of information, looking at this chart and saying, you know what, when vol gets cheap, yeah, that sounds like I should just be able to sleep well at night. But really what it means is that you really need to be on your toes. You need to be looking at the risk factor, looking at the environment out there. And when you're looking at it in terms of, let's say, the Nasdaq, we're going into earnings. And even though volatility has come down and it's cheap, it does not mean that you should sleep well at night. It means that you need to do your homework in advance of these earnings so that you are able to prepare. So if volatility starts to rise, and it started to rise when the market was still hovering on that 20-day moving average, until it broke that 20-day moving average, you didn't see it come up. And then it broke the 50-day moving average and sustained. And the volatility sustained itself while under this 50-day moving average because of the fact that the marketplace was trying to determine, is there a shift in trend? Are the bears actually taking over? So if we don't know, volatility will stay up. Once we saw that it broke through the 50 and 20-day moving average, you immediately see that volatility came off, retraced back to its mean, which is in that 13-14 level, and has come down, and the resumption of the upside in the case of the bulls has continued, but now we have to be on our toes because we have earnings. With that being said, we're going to be talking about more earnings plays this afternoon, so join me here at MarketStream.live this afternoon at 3:30 Central, 4:30 Eastern Time. I'm going to be covering all that information for you so you have better context, and there's no one else out there doing what we're doing here at MarketStream, so we'll see you then.